Good morning, good afternoon, wherever you are when you're listening to this. This is Hack and Company at Remax River City. My name is Taylor, and we are talking about what's going on in real estate in the greater Edmonton area. The REALTORS Association of Edmonton has recently released their statistics package showing us what the numbers say as we close off August and kind of head into what should be a pretty exciting fall. I want to bring in the teammates here so we can talk through, because this team has been they have been incredibly busy. I think that we had, what was it, 16, 17 transactions in the last 30 days. We're definitely beating the sell a house every other day mark, which is a ton of experience. Let's go around the room a little bit here. Jane, good morning. How are you?
I'm good. How are you?
I'm doing really good. You have also been incredibly busy. How many houses do you think that you've shown this week?
I think I show like 6, 7 every day. So about 50, more than that, a little bit.
Oh, wow. 50 or a little bit more than that. Is anybody else, do we have any cutting out in the audio? Could you guys hear Jane okay there?
Yep.
When you guys nod, no one else can hear you. So are you saying that you can hear them all right?
Yes.
Yes.
Okay, that's awesome. So because I'm seeing on my side a little bit of static here, I just want to make sure that this is a pretty good experience. So Jane, you were saying 6 or 7 houses every day over the last week. That's a lot of properties to walk through. And you gain a lot of experience when you're out in the marketplace like that. Cordell, this has been an incredibly busy year for you so far. When you take a look at how you're seeing the market shape up, what do you think of like the summer market? Was it much change at the spring market for you?
I would say it was about even. I built my spring quite well, so then I found myself running. There was a little bit of a lull, but then in just working my pipe, I had a lot of business throughout the summer as well.
That's awesome. And also, Tony, you've had several summers in real estate. How, as we close this summer, did you feel about the summer market?
You know what? It felt really hot in some places and not so much in others, but enjoying it for what it is and excited to work with some folks going into the fall.
That's awesome. Well, I have been doing this for quite some time now, as we kind of cross over 10 years in real estate, and now we're on the countdown. We're 10 houses away from 1,000 properties. Can you believe it?
That's great.
That's a lot of experience. And what I can tell you from experience is this was a summer market like not many I've seen. I have not seen many summer markets in the last decade where real estate remained at balance and tucking into a seller's advantage. In fact, the amount of inventory that's on the market is less than any time during a summertime in my career, for sure.
Yeah.
We're talking significantly less. I think that's probably the biggest story in real estate, is what's going on with inventory. What do you guys think? Agree or disagree?
I agree.
I agree. Yes,
Any expansion on that?
Because I tried to find house for my buyers, and it looked like I couldn't find it fast like before. So a little bit struggle there, and anything come to the market and it's gone really fast if it's really nice. So yes, we have less inventory now.
What does that mean for you, Cordell?
It's kind of the same boat I've been in, working with clients' schedules, a lot of out-of-town clients as well. So maybe they aren't able to be here for the next like 4 or 5 days. We see hot properties come up. They say, when we get to town, we want to see this. By the time they're here, it's already gone. So that's what I've been dealing with as well. I've had a few clients that have felt like maybe they've sacrificed a little bit just because of what was available. They still love what they purchased, but it wasn't, we don't know if it was their first choice, because a lot of things that looked great online left.
Yeah, there's I think that you got to be quick out there, and it's kind of tough to decide. And also, there's a lot of people having trouble acclimating. Like when you take a look at how the market shaped up during the summer and how pricing has changed, like if you it's kind of both ends. So not only is the stuff that you would have liked at like 450,000 now selling for 460 or 465, like it's moving up significantly, but also the interest rates keep moving up, so the amount that people can qualify is changing as we help them in real estate. You know, that's something that a lot of people are less aware of, is that the buyers are kind of a moving target now because we're seeing these waves of interest rates. And as much as we didn't see the Bank of Canada make a change this week, there was a lot of people that were kind of on the fence. We actually did a video about that, right? So, Tony, what did you suggest in the video? Did you call that they were going up or not?
I definitely thought they were going up at least 0.25%.
Cordell, how about you?
About the same, between 1/4 and 0.5%.
I flat out said don't bet against them going up. I flat out said that. And then Jane, what did you say?
I say it's gonna keep the same because I believe it's gonna be the same. So.
And Jane was right. So after kind of the economy reported back that not much was, well, basically activity is curbed off, then they didn't raise interest rates this time. But it was kind of interesting to see the market reaction to that, because we see like fixed rates starting to fluctuate now as though the market is like betting against the government having to raise rates. Like, or sorry, betting against the government holding rates. Like they're thinking that because they held, they're definitely going to have to raise again this year.
Yeah.
Tony, you kind of had a take on that.
Mm-hmm. It's just interesting to see what's happening. You know, for instance, we were just talking about inventory based on the last, you know, the summer months, June, July, August of last year, and what the inventory was over those same months this year, were 3,500 less houses listed at that time. So I think we're seeing, you know, a lot less people that are, you know, wanting to move. Maybe they're nervous about moving, and it's causing problems for those that are actually trying to purchase houses, because the good stuff, limited inventory of the good stuff is going quick. Day zero, you know, places are gone really quickly too. So people aren't waiting till day 1 or 2. They're gone within a couple of showings. That's how quick people are on the trigger.
Jane, you're agreeing there, hey?
Yes, absolutely agree. Because whenever my clients see something and they like it, they send it to me right away. I check it and they number one, and it's already pending. So I say, it's pending, and they like, it's go that fast right now, because people still thinking Edmonton quite slow, but the truth is not. So.
You know what? The other day I booked a showing for day 1. The property got listed at about 4 o'clock in the afternoon on day 0. And then I went into the next day to book a showing because my clients weren't available in that, you know, short notice. And day 1, there was 1 available spot left during the day for showing, so I grabbed it. And then I'm guessing they canceled everybody's showings because they went pending that on day 0 night. So they didn't even want to wait for all those showings the next day, which probably was a mistake. But you know, that's the type of market we could be dealing with in some areas. It's not like that in other places.
So let's go into that a little bit. So what we're seeing is that we're measuring it now out at 3 months of inventory according to measurement of supply versus demand, right? So to explain that, it's going to take us 3 months of inventory to run through all the houses that are available at the current rate of sales that we're running. And what that indicates to us is that this is a seller's advantage, because it's about 3.5 here that represents a balance. So sellers are not nervous about finding their next buyer. They're finding an abundance of showings on their property. Like my last listing had over a dozen showings on opening weekend. That is like 4 weeks of traffic from 2018, you know? So they're getting a lot of attention right now. And that's really changing the landscape because buyers are like, oh, how do I find the house I want? And it's like, well, you kind of have to choose from what's available or, wait. But if you don't buy this house right now, then you're going to possibly have to pay more for the next one because it's going to base itself on this one. But let's unpack that situation that Tony was talking about. So in this seller's market right now, Cordell, what do you think? Like if you had a property that was listed for sale and you had so many showings they were booked out all day, would you have taken an offer and gone pending on opening day?
Not a chance. Um, uh, as a realtor representing sellers, my job is to get them the most amount of money. And so if we're seeing heavy traffic like that, my advice would be that we hold for offers and then we facilitate a multiple offer situation. Let's say at the end of the weekend, we let everybody who wants to go through because weekends are always the hottest time for properties because nobody's at work. And that would give my sellers an opportunity to make more off their sale than they even expected, which could help them if they're going to be running into the same situation when they have to go purchase.
Mm-hmm. Yeah, I would really wonder what that offer was because I know that I am susceptible to a bully offer, right? If I had clients on the market at 500,000 and somebody shows up and I'm getting showings through the roof, I already know market value on that property. We just did a market evaluation on that property based on what sold. And now the market's telling me that that information was last week news and this week things are more exciting. And if somebody came in at like 525, I think my sellers are going to want to think of that. If
Oh,
somebody came in over that 540, 550, well, we might just be like, hey, that bully took our lunch money. But you better be a bully. If you're showing up with like time restricted offers on opening day, right? Because we have metrics to follow. Like what Cordell was mentioning is part of the HACK&Co listing launch process. And we know if we're getting an offer on Friday and we already have like 5 or 6 showings scheduled, it looks like it's building into the weekend, like we're going to see you guys on Monday. We're collecting offers all weekend long. I totally agree. How did you looking through the statistics package overall, was there anything aside from inventory that really stood out to you?
Yeah, the thing I made notes about was how sales to new listing ratio, the biggest jumps overall, like everything was down. Detached houses are selling at a slower rate. Same with semi-detached, but the row and townhouses were up 16%. They went from like up to 89% for that specific, and also the apartment style condos are up 3%. So I think that's showing us that there's a lot more attention on the the lower end of our market, the more affordable. So might be people jumping in saying rent's getting too crazy, might be people relocating from other areas hoping to just buy something to kind of get established with the area before they kind of dig in and buy like their next home. But yeah, that was the biggest jump that I seen was the sales to new listing for row and townhouses and then apartment style condos.
So kind of recapping on that, when we take a look at sales to the new list ratio, we see that for every 10 new listings, how many of those or how many listings are leaving. So it's like the flow rate.
Mm-hmm.
So we're seeing that, what might be normal right now is like for every 10 properties that arrive in a segment, to like see 6 of them leave. But we've actually seen it where specifically duplexes, where there was like 11 leaving for every 10 that were listed. These are things that we've seen in the past. But if I was to follow your line of thought, what you're seeing is people being pushed down market. So not enough
Right.
available inventory, prices are going up. You really wanted to buy a house, but now you're buying a duplex. Oh, prices are going up. There's not very many duplexes. Like there were, thousands of new house listings last month, but there were only hundreds of new duplexes, new duplex listings. So you can get pushed out of that market pretty quick. And now you're in townhouse land. Welcome to row houses. Anything that jumped out at you, Cordell?
I thought it was interesting that our inventory as a whole is low, but our new listings for the month of August was higher than our 5-year average, and was also, especially like the mark total residential, is as high as it's ever been over the 5-year average. And I think that just goes to show how fast things are leaving the market when they're good.
Yeah, it's kind of interesting in that way. So you're saying that even though we're getting inventory, in fact, in some cases there's more inventory, that it's leaving the market so fast. It's not that inventory is not accumulating.
Yeah, it's not even being noticed.
And the market's getting faster, right? Like we were at 3.3 months of inventory in July, and now we're at 3 even. And so the lower that number goes, the faster it's going to feel, the more of an advantage sellers are going to have. And that's just, I think it speaks to everything we've been talking about so far, and most importantly, the lack of inventory that's out there.
Yeah, and that's going to be that's the calling card of every strong seller's market, is lack of inventory. So we saw places like Toronto and Vancouver through the pandemic drop down to weeks of inventory, days of inventory in some places. So when we take a look at like what's possible, there are some pretty exciting things that we can see come, especially if you already own real estate in the greater Edmonton area. Like if you already own real estate right now, what you want to see is the most severe seller's market we've ever seen before. That is how equity is built in your property. You want inventory to be unavailable, so buyers are fighting each other with higher offers and the value of your property goes up. And that's actually what we're standing in, like that's what we're currently dealing with. Because Tony, you were also mentioning apartment style condos. Who's been helping people with apartment style condos recently?
I have.
Cordell, buyer or seller?
Buyer.
Okay, there's some good rips in apartments right now. Like if you take a look at the list price to sale price ratio, you can get 5% off at average days on market in condo land.
Just got a little bit more than that, but yep.
Woo.
Yeah, we got about 5.5%
So there's still deals to be had.
Come again?
But there's still deals to be had,
yeah.
right? But has anybody sold an apartment style condo recently?
No.
The traffic is nice. Like there was times where you used to beg for showings in apartment style condos here. A lot of people don't realize that they went down in value more than anything else. And now I'm calling it. So if you have condos that you want to sell right now, I want you to hold them. I know I'm a realtor. I get paid when people sell stuff, but I want you to hold them, because right now, if you sell, you are going to sell months before things are awesome. You are literally like, I'm calling it. These are undervalued. They are going up starting now. We are now at one buyer for 2 sellers and picking up and trending. So as things progress a little bit further, these things are going to gain value. And I think that if you're thinking about unloading right now and you did it the same time next year, you'd have a smile on your face. And if you do unload right now and you look at the numbers same time next year, just don't look at the numbers. Okay? I also think that was one of the most interesting things about the package. Jane, was there anything that stood out to you as far as the market stats package?
So like just what you said before, when people don't have enough money to go from single family to go to duplex and go to townhouse, and yeah, I can see that very clear in the market stat that they go to the condo. So for the row and townhouse, we have the increasing very strong compared with the other 4 years. Also in the condo, it's happened the same. So it's rising up.
Yep. It's neat to see that. What was the most interesting thing that you encountered this month? So like when you were out in the marketplace, what was the thing that kind of like raised your eyebrow? Anything like notable? It doesn't necessarily have to be like the most interesting thing, but who's got something fun?
For me, it would have to be the amount of times in August I ran into multiple offers once a property was already like 20 or 25 days on market. Like no
So
reason.
that's irregular.
it was like no recent price changes, and then you go in and you're like, okay, this is great, we're gonna get ready, and then all of a sudden it's like, I'm sorry, there's other offers. It happened so many times. It was kind of crazy, and it was almost always in Millwoods that I was running into that this particular month.
Oh,
I find that
thanks,
interesting
Tony, for
too,
bringing that
because
up.
normally it's a price change. So it's a move in the property that causes a multiple offer, right? So either a new listing or a price change. So is it possible that our market is so dynamic right now that you're actually seeing the market move and bubble up and cause multiple offers on stuff that's standing still? Go ahead, Jane.
Thanks, Tony, for bringing that up, because I run into exact the same thing. Like, it's on the market for about 33 days. And then we run an offer, and the other agent said, "Oh, we have another offer." And then, yeah, so we multiple offer. I run into like 2 in a row. So the same situation.
That's interesting. I also found that it was really interesting representing sellers this month, like having people come to us, especially when they made offers that were like aggressive. An aggressive offer over opening weekend, my client flat out rejects it. They come back and basically take our price a couple days later. So interesting to see how things are going. But in that situation, still can pop off multiple offers. So there are parts in the pond that are hot and cold. Where's the hottest point you found for sellers? Like, so normally we find this representing buyers where you find a place that you just can't find anything.
Yeah, I've been finding it pretty hot around the $350,000 mark. It's usually like first-time buyers are approaching these properties. They're trying to find places that are the most move-in ready, offer the most things, need the least amount of work. But that price range seems to be pretty hot all over the city. And honestly, I've been comparing, let's say, far north, Castle Downs, like Galindo area versus Millwoods, and showing how much the value increases north. Like, you get much nicer homes for the same price up north than you would in the south. And it's actually steered some buyers further north because they're like, hey, our dollar goes further up here. For the same amount, you just get more. So that's been interesting to see.
Yeah, it really depends on what you want as far as location. Like a lot of people don't know that as you go south in the city, everything's worth more. Even when you take a look at retail statistics, the highest profit per square foot of any mall, it's not the big world-renowned mall in the West End. It's Southgate. Southgate makes the most money per square foot of retail in this city. And there's a lot of also the airport being south of the city, and people traveling out of Edmonton. Well, 9 times out of 10, they're heading south and not north. So you see how these cities kind of develop that way. But I think that's going to be a big story next year, is drive until you qualify. Oh, you really wanted to have like a 2-story property that's around 1,800 square feet. Maybe you were thinking about Windermere, and now you want to think about Summerside, right?
Yeah,
just kind of move down a location.
Yeah, I mean, just even a recent example where we helped someone sell a property here in Edmonton, and they're relocating just out to Lloydminster. What they're getting out there would be $200,000 more here in the city. And so we're going to be able to help people go to, just outside the city limits, and they're going to be able to find something that they're really excited about versus what they can actually qualify for in the city.
Because to give you perspective on what it is to qualify in the city, our benchmark price is around 430, 440,000. And what that means is a typical house, as described as 3 bedrooms, 2 bathrooms, a finished basement, and a garage. Okay, so you can get that in Edmonton, but you cannot get that in great locations in Edmonton at that price. Now, when we talk about average price, we see that if you're talking about house, over the last 5 years, the average single-family detached house was 471,000, and now it's 495. So things are really kind of changing a little bit here, but it's nice to know that you can actually have a house with a yard and a pretty great experience in home ownership in Edmonton, Alberta, for south of $500,000. Do you guys get a lot of comments for the people that you're helping moving from other centers about the value here? Like Tony, you were just mentioning that if you move from Edmonton to Lloydminster, you can buy a palace by comparison. You can basically move and double the size of your house, right?
Yeah. And, the people that are relocating, like I'm working with someone today that's looking at buying a property to hold for the year, fix it up and sell it. And they can't believe that they could pick up a place like this for about 300 grand. Like anything like this in the greater Toronto area is going to be pushing $1 million for something in the same condition where it needs a lot of work, and they probably won't yield the same amount of profit. So they're like, let's just move to Alberta. We'll do this a couple of times and then we'll really find out where we want to be and we'll buy a really nice house. Kind of building all that sweat equity themselves. So it's interesting to see what people are looking at doing. And this particular family was already having to relocate. They can't afford to live where they are anymore. They're thinking, hey, we might have to move 4 or 5 hours north in Ontario. Why not just move to Alberta? Like, let's just go there. It's more affordable. We'll be able to be, further ahead in a couple of years. And so I think that's great. And Alberta, we're open for business.
That's true. And especially when it comes to landlords and tenants. Like, I've been watching what it's like to be a landlord in Ontario, where you can't actually evict tenants. They have to be evicted by the landlord tenant board, who's like 4 months behind in even processing requests. Like, I couldn't believe it. We think it might, in some situations, we feel as though we have it rough here, but here is way more landlord friendly than most other provinces. Like, it's great to be the Wild West sometime. So when we take a look at buyers struggling for inventory, where can buyers still have good experiences? So, like, where do you still get some decent choice? What price range and area of Edmonton?
I've been finding between the 4 and 500,000, honestly, on the south side, whether it's Ellerslie, Summerside, Rutherford, Walker. I even have some clients where we have some great things to look at in the Duke because they're willing to live a little bit outside of the city. So we have great options between the 4 and 500.
That's good. Jane, is there any places that you found where at a price point and an area that there's some pretty good options for buyers and not everything's selling before it's listed?
I absolutely agree with Cordell. What he said there is the price range is from 400 to 500. We found a lot of incredible property. Even like when we go to the north side, below 400, there's a lot of house that they got recently renovation. So it looked pretty good too. So in the north side, they have options from between 300 to 4. In the south side, they have like the option for the newer house from 400 to 5.
Mm-hmm.
Yeah, I've been
thing.
running into. Oh. I was just going to say I've been running into a lot of brand new homes that are the residential attached style. So looks like a looks like a townhouse, but doesn't have condo fees. And a lot of these properties, of course, they're brand new. There's a lot of value there, but these properties are being priced against detached houses nearby. So for instance, in the West End, you can pick up a residential attached that's brand new for about 400 to 425. But you could buy a detached house with a detached garage, lane home in the Hamptons or another neighborhood nearby. So, do you want something brand new? It's going to be smaller. Who knows what resale is going to look like in a couple of years for those, or would you like to have your own standalone home for a similar price that might just be a couple of years old? So it's interesting to see the contrast and kind of what's out there, but those residential attached, there seems to be a lot of inventory for at that low 400 range.
That's good information. I feel as though you can have a night and day experience in different places in the greater Edmonton area. Like if you're looking around 400 in Sherwood Park, it is a struggle. Get ready to have to win a house instead of just choosing a house. But there's some great properties out there. And you know what? As soon as you buy it in multiple offers, by the time you take possession, you're probably already have some equity because the next listing in that neighborhood is going to list for more and they're going to get it. And then when we take a look at the same experience in that 400 range on the north side, seems to be lots of options. Like North Central, if you're looking for a similar style house in like 1970s kind of thing, just north of Yellowhead, and then went to Sherwood Park looking for the same thing, you'll have a way better experience shopping in the north side there. So it just depends on where you want to be. That's probably the big thing. And then also, as we look into the fall market and as we close our show here, what do you guys think of the fall market? It looks like the summer market is tighter than we've seen it in a decade. Like this is a stronger summer market. Normally it dips back as people kind of go on vacation. Not right now. Still running hot. 3.0 right now for months of inventory. As we go into the fall market, what do you think? Do you think it's going to stay hotter than normal, or do you think it's going to taper off?
I think it's going to stay hotter than normal for sure. I know I'm working with people that are still running, so I'd imagine everyone else is feeling somewhat the same.
I think it's going to get hot. I think it's going to get to the point where we've got our buyers that are calling us like, did you see that new place that's listed? Or we're showing them like, we should check out this other neighborhood. It doesn't seem as busy. Like the market's going to get busy. There's a lot more attention now that everybody's kind of back into the regular routine. And we've been talking a lot about getting in before the snow flies, which could be tomorrow, right? It could be most likely at the end of October, early November. And so there's lots of time to make that happen. And I'm expecting it to get busy. A lot of the people we've been working with were just enjoying the summer, and now they're really turning their eyes back onto real estate and trying to find out where their next house is going to be.
And what do you think, Jane?
And I also think it's going to be hot because like buyer also noticed the price is increasing right now, and they want to buy before it's go crazy, before the price going to go really high that they couldn't afford it. So they want to do it right now. So I think this fall is going to be hot.
I think there's going to be a few factors that kind of affect us as we close this year. So if you thought that maybe this is going to taper off and change, my question is, where are you going to find 1,000 houses right now? Because like you would have to find over 1,000 properties to make this similar to what it was next year and list them right away, right? And just like Cordell mentioned, even though there are segments that are listing more, buyer demand is just picking them up. The other thing that I'm seeing is that I do think that we're still going to see interest rate rises later this year, and it's going to continue contrasting to the Alberta advantage. So we're going to continue to have positive net migration. And now Calgary, the typical house is 680,000 by comparison to our 430. So people are definitely going to be coming here. And the other thing that I got on my radar right now is that home equity line of credit deadline. Like originally, you could get a home equity line of credit that was 80% of your property's value, right? And so banks started to kind of screw with these things where they'd be like, hey, Cordell, why don't you give us 20% down? We'll give you an 80% mortgage, but it's actually 79.99%. We're going to give you a home equity line of credit for $1. And as you pay down your mortgage, you're just going to have this available low interest line of credit come available to you. Well, what do you think when everybody went through pandemic and had that like YOLO mentality? Do you think they racked up those lines of credit?
Yep.
I think they did. And now the bank's coming around realizing that the average Canadian has longer than a 35-year mortgage based on how variable rates have been affecting their amortization. And there's a ton of people that have been servicing interest only on these giant lines of credit. And because markets can fluctuate enough that we can see some movement here, it's really concerning to them. So they're cracking down. And by December of this year, you got to get all of those lines of credit in check to 65%. And that is going to mean that some people, their property has gone down in value to the point where that's going to be a concern depending on what market you live in, not here. There's going to be some other people that just don't have the cash, so they're going to have to sell or refinance. And refinancing isn't friendly right now. Banks are even talking about being selective at renewal, meaning when you go to renew, they may ask you to requalify or tell you that they won't take you again. Oh, it's going to get spicy, especially since the largest bank in Canada just got through initial improvement to buy the spiciest bank in Canada for mortgage rates. RBC just picked up approval to buy HSBC. So one of the highest priced lenders in the marketplace is going to buy one of the lowest priced lenders in the marketplace. It is going to be interesting. Well, thank you guys so much for going through this information this morning. You guys are killing it. We are having a record year. I've this last month seeing as many properties come out of the gate. We're also seeing a lot of attention from our brokerage, being the #1 team in July. That was really exciting, and also for a small team. You know, we're being compared to some teams that are in some cases triple or quadruple our size. So way to go, and way to go, marketplace. Edmonton's the place to be. We're the most searched location in Canada, and we are shaping up for a great year this year. Well, go team. We'll talk to you guys soon. Thanks so much for sharing your thoughts.
See you
Yeah.
guys.
Yeah.